Hi, this is Henk Voss, founder of ForexTradingProfitSource.com. I'm a Forex trader and this is one of the trading systems I use. Many traders are looking for free trading systems. So today, I'm going to start the first of a series of videos showing you a profitable Forex trading system. I'm going to tell you about the entries, the exits, and the money management aspects of this trading system. The system is a profitable Forex trading system and it's based on flag patterns. What you can learn from this video series is the value and the reliability of the flag patterns as one of your Forex trading strategies. I'll show you how to recognize a flag pattern in both rising and falling markets. I'll show you how to trade the pattern for optimal profits. And I'm going to give you the whole trading system for free. I'm going to give you the details you need to determine when the setup is forming, when to enter the trade, what money management rules you should use to minimize your risk, and how you should manage your trade as it develops to maximize your profitability and exit the trade with the best profit you can take. First of all, let's just have a look at what flags are. Flags are really a pattern that resembles a normal flag you see flying on a standard flagpole. It's a continuation pattern in that the market will continue in the direction of the flagpole. The one shown here is a bull flag. There's also bear flags. They just look like upside down bull flags. And while I talk about trading flags mostly in the bull mode, the rules for trading bear flags are just the same. You just reverse the direction. So why trade flag patterns? Well, over the years I've found flag patterns to be one of the most reliable patterns in the market. Flag patterns hit their profit targets in about 70% of cases. Obviously you'll need to check how frequently this happens in your own market with your own time frames before you trade these patterns. I also like flag patterns because they're really simple and easy to recognize. There's no need for complicated indicators, and you can trade them very successfully using only a bar chart. Having some volume information helps, but you don't need it. Another reason why I like flag patterns is that they generally move very fast once they're activated. So you can jump from one pattern to the next and trade your way through one every 2 or 3 days and take a profit and move on to the next pattern and trade that one and so on. And repeating that activity over many days throughout the year will give you a very good rate of return on your capital. In the past I've had rates of return over 50% and easily up to 135 in 1 year trading this pattern. Another reason I like the trade flag patterns is because they occur in all time frames, and therefore it's really quite easy to find regular and frequent setups. This means you're not waiting for weeks for your pattern to develop and trigger. You can simply move through a number of Forex currency pair charts and different time frames and look for patterns in those charts, and you'll generally find 1 or 2 every day. Another thing that I think is really important is that it works in both bull and bear markets. And then the last reason I like to trade flag patterns, and this is really important, is because it gives a really good risk-return profile. Because the pattern's continuation, and then it tends to explode once it triggers, you can set your stop loss quite close to the entry point, and you can achieve a very good performance in terms of risk-return. You could expect to see risk-return profiles of 3 or 4 or 5 to 1 trading this pattern in the Forex markets. So what's the edge of flag trades? Well, as a seasoned trader, I think it's really important that when you're looking at a new trading system that you understand why it has an edge. That's something that you need to understand why the trading system will give you an advantage over other people who you're competing with in the market. And if you don't understand that, then you shouldn't use it. Well, the edge is based in trade psychology. It's a short-term consolidation pattern, as I already said. It's got 2 parts, the flagpole and the flag itself. And the pole forms on a positive or negative reaction to a market event. Let's say that the US Fed changes interest rates, increases the rates, and that drives up the value of the US dollar against all other currencies. That would happen very quickly, and it would create a flagpole type pattern. Remember that the flagpole could be up or down. The flag then forms as a result of a slight reversal in that sentiment. Say there's been an interest rate rise that has affected a currency. Traders bid up the currency and eventually the buying power runs out. And then the people who've bought it are sitting on some profits and they can't quite believe it. A few will take profits, but most will hold on to see what will happen. And then over the next few periods, the price falls just slightly on profit taking and maybe covering of positions. And that creates the flag pattern, which is a downward sloping trading band. The dollars have sold out and the position covering stops. There's only one place for the price to go, and that's up. And once that move starts, it generally moves quite quickly with a significant jump because there are no more sellers. Obviously, this all happens in reverse in a bear market situation. But before we get into the details of this trading strategy, I wanted to point out something that I think is really important and will help your profitability in the long run. To help me manage my trades, I have developed this CERT trading approach. It helps me when I'm planning my trades. I think that trading's not just about entries. It's very easy to find information on the web about entries, but good trading involves more than that. And to be profitable, you have to consider other aspects. It involves learning how to find setups. This is the S of my CERT system. By setups, I mean the start of the pattern for that currency that tells you the trade might occur. Very often these things don't happen, but it's worth knowing whether the setup is a good one or not. So setups are important, but you must understand the exact decision point where you should enter the trade. The point at which you pull a trigger, or so to speak. The E of my CERT approach to trading. It's also important to understand the risk and money management strategy behind your trade, the R of the SERT system, and lastly, it's also important to understand how you're going to manage your trade, the T of my trade planning. By trade management, I mean you got to know where to set your initial stop loss, how and when to move your stop loss as the market moves in your favour, and how to profit take as part of your trading strategy. It's these latter two elements that I think make the trades most profitable and keep you in the market long enough to learn a trading strategy. There's no point in having good entry signals if you can't manage to take a profit from them, or you get hammered when you take a loss. In the next video in this series, I will look up the setup characteristics of the flag trade. If you want to be sure to see the rest of the videos in this free series, as well as getting access to other free trading strategies for the Forex market, please put your name and email into the box that appears on the right. I will then send you all the details of them as they're completed. Your privacy is assured, and as an added bonus, I will send you my free ebook, Finding Your Way Around Forex Trading. Until next time, good trading and good luck.